Markets are ripping as we speak. CTO put in the order for the DCA pump this morning, and everything is on fire. Gold, Bitcoin, Solana, everything's ripping as it normally does on Monday. Thank you all for joining. We have Mando, we have CTO, we have Marty. You can watch this in all of our channels. My links are below for these legends. Wow, what a weekend. Rectember is not coming to fruition as we expected, which is good. And we have a lot to talk about today. We've got to talk about money flows. We'll look into some TA stuff. We will talk about Bitcoin and new price targets, maybe some threats to Ethereum and Solana with a new potential layer one killer everybody's very worried about. We'll defud all of that stuff as well. But before we jump in and rip through 25 items that are very important for your alpha bags, how is everybody? Mando, hanging in there?
Doing great. Yeah, it's been period of chop, which I think a lot of people have been shaken out and calling for the top. And I think if you've just been chilling out, owning onto your long-term holds, you've been doing pretty well over this period.
Awesome. We saw a new all-time high as well for an asset we'll talk about. CTO, all good in the hood?
Fantastic today. I'm pretty excited about the price action here.
Yeah, it's always funny. I remember soon this time of year, you'll be streaming in and it'll be dark outside, if my memory serves. So,
Yep.
and Marty, how are you?
I'm good. Had a nice quiet weekend. Didn't travel, thank gosh. Everything good. Price action good. Lovely bottom yesterday for now. I still think there's a 50% chance they try and take all these positions down back to those lines. But yeah, a lot of good news today. Just tremendous bullish news. Obviously, we should talk about the private blockchain space and make people understand the difference between private and public blockchains. That's been the talk of the town. But yeah, lots of things to talk about. Happy to be here. I'm just going to grab my coffee, but I'll be back.
Go
ahead.
This one's called 200K or bust. And the reason we call it 200K and is like the #1 cheerleader for crypto on the planet, Tom Lee says easy 200K by year end. Mando is that complete hopium. He did say, I saw a glimpse of a tweet that he said $63,000 Ethereum, which basically would be an $8 trillion company. If that was possible. It's like sometimes he's a little bit salubrious. What do you think?
Yeah, I mean, he has very aggressive price targets throughout. So I'd still put him on the aggressive end of price targets. I still believe that we will see this correlation back with global money supply, particularly as the Fed starts cutting rates. So, and as gold is now broken out, I think we'll start to see that correlation. So I still think we could go above 150K or go to around that sort of level by year end. That seems like it matches up with kind of the correlation. 200K, I think, would be a bit of a push. I do think it would be a bit of a push. But it's good that he's on CNBC saying this stuff because you need to have people saying that.
Yeah, the TradFi cheerleader, bringing them into crypto. We saw his impact on Ethereum. It was nothing short of amazing, in my opinion. Let's talk about what you think, CTO. 200K, a dream, a fantasy, or is it possible based on your circles?
It's definitely possible. Yeah, for sure. I think possible is a great word here. I don't really predict the future. I don't think I can, but we can definitely paint out possibilities and then track and see which one seems to be tracking along. So yeah. I think it's possible.
Okay, Marty.
Yeah, based on global liquidity, which I follow, I think exactly around the 8th of January, we should hit around 153. I think that'll be our top. There'll be a pullback right after that, I think, probably to 130, and then we'll run up probably to 170, 175, probably by middle of next year. I say we'd hit 200.
Yeah, we have another canary in the mine, gold. Maybe there's a gold chart you can pull up as well, CTO. Gold keeps on ripping, and Bitcoin typically follows 30 days later. So it started ripping about 10 days ago. So and it continues to go. This is a very good harbinger of things to come for Bitcoin. What are your thoughts, CTO?
Yeah, let's look at some charts here because, there's not so much scam weeks and manipulation in gold, right? So it's not, they're not as good at that, the central banks, as the average crypto traders. So the charts here are much more well-formed. And we talked about it, right, on the channel, that gold was creating this very well-formed ascending triangle And instead of breaking the parabola, it broke out and it shot up here. We've kind of seen this all the way since this breakout here in 2000, which was the big generational breakout that happened in, what was it, March last year. And since then, it hasn't actually slowed down. This would have been the point where it could perhaps broken down, but it didn't. Instead, it just went into continuation. So the trend is still on in gold. It's in price discovery. Trend is up, forming bullish patterns, holding the parabola. Everything is enormously strong in gold. And traditionally, that has kind of spilled over on Bitcoin as well as the digital gold. And that is kind of a thesis that this one should catch up and start shooting up here. Being the digital gold and kind of following similar premises. And today, we're actually seeing for the first time in a couple of days here, something very interesting and exciting. This is potentially forming an inverse head and shoulders here. So
Correct.
We're already above 112,000, which is this critical support resistance. We're already above that now as we're recording this or streaming this. And if we can break up just a little bit more here, we do confirm an inverse head and shoulders, which sets the target back up here. And my guess is that we're off to the races then. So this is very interesting today. This candle here, please hold, please go a little bit more. And then we have a very bullish pattern in the chart, which I think a lot of people will identify, which can also be self-fulfilling. And I think we could move up higher then.
And remember, Sunday, Monday are typically the strongest days for Bitcoin. But Marty, you seem excited about this inverse head and shoulders.
Yeah, a couple things. Firstly, the premise that Bitcoin is volatile is nonsense. It's artificially volatile. I've been preaching this for years. It's manipulated by unregulated offshore exchanges and a dominant futures market. Gold has been regulated since 1928, I believe. The stock market regulated since 1933. With strong illegal rules against wash trading or trading against customers. Also, gold has single exchanges worldwide, very easy to regulate. Crypto has 1,600 unregulated exchanges, much difficult problem. So give it time. With regulation, I believe Bitcoin's chart will look exactly like gold.
Awesome. Exciting. Let's get into our news story. Mando, have you heard about this one? GCUL. Everybody is kind of a little bit freaking out. You know, the traditional media, they say, oh, it's a new layer one killer. It's going to hurt Solana and Ethereum. But really, I see it much more like a Ripple XRP, centrally controlled, permissioned platform. You know, the future is DeFi, true decentralization. We'll come to you, Marty, in a second too. But this seems to have rattled the markets a little bit. And we know there are some competing other types of layer one threats coming from Stripe, Circle, Google Cloud as well. Mando, any thoughts on the so-called layer one killer, or is it just a nothing burger?
I think we've been talking about this for a little bit, right? We spoke about, firstly, when we started to see like Goldman Sachs set its own blockchain, and then we started to see that more recently that Stripe was going to do its own blockchain, and Circle. There's this idea of moving back towards centralization for some of the L1s. I think this Stripe one that was announced this week was probably one of the biggest examples of this, and people have been going like, oh God, is this going to be an issue for things like ETH and Solana? Similarly, this Google Cloud kind of one follows that sort of mantra. I do think it's going to be another fight. That's what I do think. I don't think it's going to be as clear cut as these are all just going to die. I think they're going to have another go at trying to make these more centralized, private style blockchains. I do think over the medium term, you will see that building upon the permissionless larger L1s like Solana and ETH will win. But I do think this is going to be a bit of a narrative. Like I can see this one for the next year or so, we're going to see a fight between some of the more bigger TradFi payments or tech firms looking to create their own L1s to try and capture more of the value themselves. I would love to hear, like, we kind of saw this 3 or 4 years ago and then 8 years ago as well. Every single time it's kind of failed.
Yeah.
But there's a lot of big people now trying to do this.
Marty, do you think this is an XRP but faster, fully centralized secret
I
set of
think,
sequences?
I mean, this requires a full narration. I mean, understand there's a massive difference between private and public blockchains. I mean, remember, we already have permissioned, centralized, distributed systems with Oracle and regular database systems that perform, you know, at 150 milliseconds faster than blockchains. We already have that. And they highly have regulatory capture and they have all the bells and whistles. It's called Web 2. Okay, we have that already. We use it every day. The only new technology, the only new innovation came from 2008, from the collapse of the great financial crisis, lack of trust in institutions and government and in humans in general, which was Satoshi inventing Bitcoin. And then the subsequent invention of Ethereum and Solana, etc., permissionless distributed systems preventing single point of failure. And that's the only thing new. Okay, these are all permissioned systems. What these are is, I've been narrating this for a while. Companies, corporations, and private enterprises want to own everything. This is their play to try and sneak in and try and jump and grift on the distributed network, the blockchain concept, which is like a newer database architecture, by simply building their own. They don't quite understand it. Now, firstly, it's a different industry. Okay, these are private, gated walls. In other words, not everyone can use them. Google owns all of the servers, and anybody who adopts them knows very clearly that they're still adopting something controlled by Google. And it's not just Google, that's Google's cloud universal level. I mean, I know people that have been working on that project now for 2 years. I'm very aware of it. Google's cloud is called GCUL. That's the name of the blockchain. It's a permissioned, completely permissioned chain built for institutional finance, mostly stablecoin. So yes, these things will definitely potentially consume some of the market for institutions that want the trust of corporations, that want sort of, you know, compliant regulatory integration to move stablecoin. And it's not just Google Cloud, right? It's Stripe's Tempo, which created so much controversy last week. Same thing. I mean, Stripe's being a huge Ethereum shop. And the fact that they're not using Ethereum or an L2 to do their integration is a huge red flag for Ethereum and L2. I think that is the biggest negative news on Ethereum in my lifetime. The fact that Stripe didn't do an L2 is a huge dent to Ethereum L2s.
That's a big statement right there, Marty. Yeah. Back that up.
Stripe is a big one. Stripe is an Ethereum shop. They've been preaching Ethereum and L2 since the beginning. Circle's Arc, another one.
Before you move on, Marty, set the stage for what Stripe is. Stripe is the payments platform behind literally 60% of all e-commerce on the planet. People don't realize that. It's massive, massive company.
Yeah, Stripe will be a dominant stablecoin mover in the Western economy. Pretty much. You know, we all say there's 3 phases to crypto adoption at the retail level. Right, the first level is these sort of Visa, MasterCards with stablecoins behind them, which we have now. The second stage will be native crypto adoption at the merchant level. And that's what Stripe and Tempo and Circle Arc and all of these things are aiming to try and do. Remember, they're all coming in with Visa, and there's going to be a massive marketing push probably in 2026, 2027 for merchants to move away from the current system, which is ACH, WorldPay, and all of these antiquated systems with these you know, copper-wired, horrible 5% charge systems, and introduce stablecoins through their own private networks. And then there's stage 3, which will be where merchants have the choice to just adopt public network stablecoin and bypass.
I want to double tap into the big statement you said that took me aback. The worst news you've ever heard for Ethereum in your lifetime?
Oh, yeah. I mean, understand Stripe has been pushing for Ethereum and L2 since the beginning.
Yeah.
They've been one of the biggest adversary paradigm. So the fact that they didn't use this from an architectural CTO level, the decision to not use an L2, everyone thought Stripe was going to make an L2. We've literally been waiting for it. I mean, I believe Robinhood probably made the decision based on Stripe making an L2. So this was a big spanner in the bicycle tire of Ethereum L2. And the reasons are clear. We've been saying it since the beginning. The L2s can't do 100,000 TPS. The L2s are in escrow. They're going to face regulatory hurdles. Their securities, arguably. They're not L1s, guys. It's L1s or nothing. So Stripe has put a flag in the sand last week, saying we analyzed Ethereum, we can't use it, it won't work, it's slow, it's brittle, we need to start again. The architecture is broken, and they did it in a way which was very sort of diplomatic to Ethereum. You saw it was very friendly, stating neutrality. We'll still accept Ethereum, but that's all just lipstick on a pig talk to me. These companies have done their internal testing, like I would do if I was CTO for any of them, and have determined in testing that Ethereum and L2s won't cut it. They need their own L1. Now, I mean, Hyperliquid did this already and was very successful. So kind of led the way. I think that you're going to see Canton is another one. So there's Canton, Arc, Tempo, and GCUL. Those are the three that we've been watching. They're private internal blockchains, and they're basically just an upgrade. Google's cloud will be upgrading to its own new decentralized technology called GCUL. Stripe will upgrade to Tempo. Canton is another one, very popular one, already using some of the Google integrations. And then I think Ripple, XRP is also, this is a massive competitive
Exactly. That's exactly what the point of. I want to give this to CTO. CTO, from your technology perspective, this is a square threat to GCUL, especially a square threat to XRP. They're both very centralized, except for this puppy will scream at 100,000 TPS. And you have to remember as well, Google Cloud have their fingers in major payment providers, cross-border, you name it. Technology perspective on this. And XRP, by the way, is nearly 40% the market cap of Ethereum, which is bonkers. How it's so high. Yeah.
So I know.
Can I make one final statement?
Very quick.
I've been following this for 2 years in my network. Okay, I've been very wary of these private chains being built. But let me tell you now, the word on the street is institutions are not going to be appealed by these private walls. It's centralization. It's the same problems as Web 2. They're going to seek broader network effects, which is public blockchains. And the only ones they will look at are high-speed ones with adoption. So this is a massive day for things like Solana, Sui, and the ones that can compete, especially ones on 00. Remember, none of these companies have even faced the public internet. They will have to make private fiber, and they're way behind. So good luck. I know all these people involved. I know every CTO.
Let's go. Let's go.
Yeah, I mean, I agree with you, Marty. And I know that it was basically this week that the GCUL, Google Cloud Universal Ledger, got a lot of traction. But actually, the announcement was already in February and March, when they announced that they will do a cooperation with CME Group, piloting solutions for wholesale payments and tokenizations of assets. So it wasn't actually new even, but it kind of people picked it up this time. I did something a couple of years ago that called Era Digitalis, where I had a few theses. And one of the theses there is that I feel we're going to global protocols. Most people didn't really understand that, but this is exactly it. I've seen this movie before, and Marty, you talked about it also a couple of weeks ago. Like 20 years ago, the idea was that we would build purpose-built networks. Like each corporate would have their own network with special characteristics optimized for their use. It didn't turn out that way. Instead, everyone just connect to internet. That's what actually happened. We ended up using the global protocol. Yeah, we've been here before.
Explain to people very clearly. Yep.
Exactly. It seems like such a good idea, right? Let's build a purpose-built network that is more optimized and better for our specific use case, whether it's payments for Stripe or whether it's assets for CME or it's stablecoin. Let's build a special blockchain just for that. And that seems like such a good idea. It should be better, right? But it's the same idea that we had before. And at the end of the day, the network effects of the global protocol tends to win in the end for a lot of different reasons. You don't want to be locked in. Maybe BlackRock doesn't want to be locked in by Google because, what if they, start competing in some way, or, Tether doesn't want to use Circle's blockchain, and vice versa. And, Stripe's competitor don't want to use Stripe's blockchain, and so on and so on and so forth. And in the end, it turns out very difficult to stay on par with these global protocols that are trying to build just one good protocol for everything. So I think that's what's going to happen. I think we're going to stick to global protocols. I think Mando is right also. Like, there's going to be a hump of excitement and momentum for this, but I don't think it will be the end game. I think the global protocols will win.
Okay, I think we spent enough time on the Google and stuff, but there's ton more content to get through, and we try to go fast here. Mando, there's things are heating up. I've been beginning to lose my mind when I compare any metric across 60 different metrics. ETH versus Sol, I call it gravity. Gravity has to start working, and people are beginning to see some changes here. And I'm not anti-ETH. I'm pro-technology. But now there's some wars heating up, and I doubt Tom Lee would do this because the debate would be a little bit unfair. But Kyle Samani is up for a debate with Tom, and the Solana treasuries are coming. There's a new $1.65 billion one coming in. I can't remember the name of it right now, but Amanda, what do you think of all of this?
Forward.
Yeah. Mute, I think. Let me see.
I think there's still a debate. I do. I think ETH will still be around. I think that the calling for the death of either of them won't happen. I think ETH is going to have a place just because of its scale already, and like the amount of the TVL is just unparalleled. So I think it will have you'll have a lot of TradFi which does decide to go there, whether it's via an L2 or maybe via EVM, who knows? I still think ETH's going to have a very strong presence. The Solana DApp is going to be interesting because a lot more of the DApps here have partnered with VC firms, and I think there was an initial bit of like light FUD that they were just going to be seeded with assets from those VC funds. This was different in that you're going to get $1.65 billion of cash as well. So it does feel like there is going to be actual open market buying of Solana, which I think is what we need, and then hopefully that actually spins up and creates some momentum for that as the main Solana DApp. There's a few others I think we've spoken about who are in the mix to try and be the Tom Lee of Solana. I don't think that's been decided yet. There's a chance that this vehicle becomes that vehicle for sure.
There, one question you did mention regarding TVL is off the charts for Ethereum. Ethereum is the only chain that includes their staked ETH in their TVL, so that changes the numbers quite a bit. But the market cap,
even on stablecoins, though, it would be much higher.
Yeah, same with Tron too, also very big. But this is interesting. Any quick thoughts on this one? Anybody else? CTO?
Yeah, I mean, for sure, we're going to get more of the treasury company momentum. I'm almost sure of it. It's been so successful, and yeah.
But the bloom is coming off the rose for treasuries right now, especially when you look at NAV premiums. But Coinbureau, I thought they were very pro-ETH. They posted this morning. Ethereum collapsing, the ETH not only is making new all-time highs, are very close to it, but the revenue is crashing down 75% from last year. And when I wasn't sure on this, so I checked it. And this is ETH revenue versus others. For example, Hyperliquid now does 10x what ETH does in revenue, but everything seems to be trending down. This might be the dip, and this is a weekly aggregated chart too. But August is always slow, so there's always a drop off in revenue. Marty, what do you think about revenue? Is it important to chains? Can they survive without making a lot of revenue?
I mean, I just have to start by saying there's a $29 billion gorilla in the room, Cardano, making zero. So can someone explain that to me? How is 29 billion being locked in a net that does? So that's, I can't get over that. I think that everything is slows down. Hyperliquid has taken a lot of energy away from all platforms. We know that. It's a fantastic network. It's doing great. It's making revenue. And I think it's introducing revenue as a new fundamental, which is fantastic. We need fundamentals in the industry. We need to move away from speculation. But I think we all knew this. Nobody uses Ethereum. It's just held like a store of value. Tom Lee even said it himself. They all go on about oil. It's not a store of value. It's not proof of work. People need to start learning that. It moved from proof of work to proof of stake. It's a very different beast. Very easily 51% attacked. So it's not a store of value. And it's not a very good execution engine. You can't build anything on it. All you can do is do maybe 1 or 2 transactions a day. You can't afford to do any more. So it's a very different thing. And obviously its revenue is going to drop. So we've all been saying this. It's no surprise to me. Okay. Sorry, it's a bit of a vindication day for me. Go ahead.
Yeah, this is one thing I like to look at is how things are performing against their all-time highs, how far they are from away from their all-time highs. And today, I should move myself to the left. Basically, the only one chain that's making a new all-time high today and at the all-time high is Hyperliquid. So this thing is really taking off. It's making a truckload of money. And remember, it only has 50,000 users. But those 50,000 users are spending 14 million a day, which is bonkers. Mando, I see you nodding. What's your take on hype? Is it up to the hype?
Well, they're adding another feature this week, and it's something that if you're involved in Circle, you should probably be aware of. Hyperliquid is looking to create its own stablecoin, or its own USDH, and there's several different firms in the mix to try and get that contract. Circle has been the main stablecoin on Hyperliquid, and this could really affect Circle's revenue if they create their own stablecoin, which then you could create a buyback with that stablecoin. And one of the top down, the biggest meta right now in crypto is the revenue meta, of which there are 3 strong coins around. There's Hyperliquid, there's Pump Fun, and there's Athena. Hyperliquid is obviously the perp platform turned into a chain, does massive buybacks based on the fees it makes from the perp platform, but is now moving into this stablecoin play as well. Athena is the stablecoin which does the futures basis on ETH and certain other chains, i.e. it goes long spot, shorts the futures and takes that yield and gives it to a stablecoin. And then Pump Fun is the token launchpad, of which on a revenue multiple looks probably the cheapest out of all 3 of them. But those 3 coins all continue to trade very, very well over the last week. And I think that is going to be a medium-term trend as lots of other DeFi coins look to try and replicate it. But Hyperliquid looks like I think it broke through an all-time high today.
Yep.
And Athena and Pump are looking very, very strong over the last
Athena's 50% away from its all-time high. Pump, I don't think is on this list. I don't think it's a top 50 coin. But interesting to monitor these activities. Marty, any thoughts on hype?
Can I just show the chart?
Sure.
Let's go to the price. Let's go to the technology. So I just show quickly, one second, guys.
Go ahead.
So we had an ascending triangle breakout today in Hyperliquid versus USD. The previous breakout was here in May at 27, I think it was 27. And today we had the next breakout. So this is an ascending triangle completion that's happening today. Okay, that's it. Over to Marty.
Okay.
Yeah, I mean, I just think what's interesting is the vote, the governance. I'm a big governance guy. I mean, if it's not fully decentralized governance, then I don't believe it's legitimate. So Hyperliquid will have, I think, their biggest test of governance on the 14th, right? That's 6 days' time to make the decision of whether to go with Paxos, Frax, Agora, or native markets for USDH issuance. And that's September 14th. So let's watch how that happens. But I think it's promising. They should do a full stake vote, and we'll watch how that goes down. But yeah, absolutely. Hyperliquid needs their own stablecoin. And yeah, this will be a dent to USDC, definitely in the short term. Although stablecoin market cap, if you look at the chart, it's up to 300 billion. It's just a straight line, 45 degrees to the right, basically following global liquidity, going to the moon. I think, go ahead.
I would argue on this one, though, with stable coins, it's typically winner take most, first of all, and marketing and distribution is extremely difficult You got to have the platform to be able to push out the stablecoin. To enter now and try build a huge market cap in stablecoins could be very challenging, and that's where ETH or not ETH, Tether, Tether and Circle own the lion's share. Combined, they're 95%. So can a new stablecoin penetrate that?
James, I just think the very interesting thing today that I think we should express, and you can identify, is we've always been saying this, that the banking system, TradFi, and the incumbent, the current, the current players in the corporate world would not lay down easily. They're going to fight like dogs because they stand to lose the most from this new technology, decentralized finance. And this is they're stepping up. Everything we see here, from private blockchains to now their own stable coins, they're trying to come in late to the game and do it all themselves. They don't really understand what we're doing here. We're literally bypassing the rent seekers. They are the rent seekers. Their entire corporations are built in taking fees from moving your production to the goods and services you need. And we are removing that through cryptography and technology. We're literally making them deprecated, and they are fighting like dogs. They're going to do, the first thing they're going to do is make their own versions, their own gated gardens, their own versions of stable coins. And we all know what will happen. It'll fail one after the other, like it did with the internet. And I just think it's fascinating to watch it happen in real time. That's my statement.
I actually disagree with that. I think I don't think it's winner takes most when it comes to stablecoins. I don't think there's some amazing tech that Circle or Tether is better than any of the other major stablecoin players. You're literally talking about putting $1 in a bank and it buying treasuries. It's one of the most basic things possible, and they've basically created regulations to stop them even paying out the yield on that. It's one of the easiest things for TradFi to get in and do. I think on the L1s, we're going to see the debate here. I actually think you're going to see a much more fractured stablecoin market in about a year or two. I think you're going to see tons of banks come in and do this themselves, and they're going to be able to do it pretty much exactly the same as Circle is doing it. It's not like Circle is some incredible business. If you look at their costs, they spend a ton of money. It's not like they've got this done at the best efficiency sort of level. So I think actually with stable coins, it's not going to be winners take most. I think a ton of different companies are going to come in and try and do their own.
I agree with you, Mando. The point we're making is, do you think that Google and all of these other corporations will issue their stable coins on their own private permissioned blockchains, or will they issue
That's what I agree with.
Blockchains?
Yeah.
That's the
I
point.
think when it comes to the running an L1 is very different. I think it is. Like, obviously there are some things like roll up as a service, or you can outsource some of this sort of stuff. But I do think over time they will realize that the cost of running your own L1 is perhaps not as good as you would think. And I think it's going to take a lot to manage that. Creating your own stablecoin, actually, I think is one of the most basic things that can be done. And we're going to see a ton of different companies come in and try and challenge Circle and Tether on this.
Yes, I agree with that.
And this goes back to money, Amanda, the point you mentioned. It's expensive to run a layer one. And if the layer one's not making money and the validators aren't making money, how can it be successful? It all goes back to money at the end of the day. But speaking of money, somebody just said someone's going to $1,000 real quick. Remember, the market cap is a fifth of that of Ethereum. It's very small. We have some ETF updates here. I thought the ETFs are going to be approved before the end of September. Now it looks like they're pushing out to 10/10, October 10th. Any insight on that, Marty? It looks like they're going to 95% sure they're going to do it.
I think, as usual, the SEC will wait until the last moment. That's just the way they do it. I also think there's a lot of political infighting as to who will be first. So they're probably going to wait until one. And then I think that they're going to, the approval of the Solana ETF basically implies the approval of 100 other crypto ETFs, proof of stake ETFs. So it's a massive decision. If they approve one Solana ETF, then the top 20 cryptos will all probably get approved over time. So it's going to create a massive market pump. And I think they're getting their ducks in a row on that. They know the market dynamics about this approval is just massive, probably one of the most pivotal approvals in the history of American finance.
I'll challenge you there. They need CME futures to be able to launch a spot ETF, I believe.
Absolutely. Yeah. So I think you'll see a string of CME futures and then a string of things. But absolutely, this is a big event. And remember, they could deny. And I just want people
Yeah.
to know, if they deny, it doesn't mean it's over. It just means we start again.
Yeah. And everyone wants the price. Some people say $1,000 real fast. I've done the numbers on the impact of ETFs and treasury companies. Remember, nearly 70% is staked, and it's a much smaller market cap. So if $1 billion flows into Solana, it'll increase the price by 20%. It's that simple. They are the numbers. A lot of people are talking about $250 in September and Whale Guru $300 by the end of the month. Is this all craziness? What does the chart tell you, CTO, right now? Hang on.
Sorry. Yes, I have it prepared.
Hang on.
So here is a SOL to BTC chart, which has been extremely useful for the entirety of Solana's history, and it remains extremely useful. So what we saw here was that while trend had been down for the whole of 2025, it suddenly turned up. Same like we had on Ethereum to BTC, we caught it, we talked about it here many times, and shortly after, the same thing happened on Solana. The trend suddenly turns up. So this filters out the price movement of Bitcoin. We're only looking at Solana versus BTC, which isolates what's happening to the project in greater detail. And we've moved up past many resistance levels. And now, today, right now, as we're recording this, we could have a breakup of the main big level, which was support many times in end of 2024, beginning 2025, February 2025. Then it broke down, then it became resistance here in March. It was resistance again in August, in end of August, a couple of weeks ago. Turned down there, came up, turned down there again. Let's zoom in a little bit. And today, we're making another try to break through this one. If this candle closes above this level, we are back above a very key level. And I think we can absolutely shoot up to the top of this range here, which is another 40% up from here versus Bitcoin. And we're still only in the same range we were in 2024. We're not talking about anything crazy here, guys. So I think that we can absolutely get to 250 and beyond. We can get to 300 also, based on this simple analysis alone with Bitcoin at current levels. So it's very exciting here. I'm very excited for seeing how this candle closes here. If we close a little above this level, that shows enormous strength in Solana, actually.
And it was stunning to see the move of Ethereum, such a huge asset, $500 billion asset doubling in the space of 45 days. It was like something to behold. Man, a good one for pegging that. The other thing that some people say, because the Seeker phone is launched and people are getting delivery, I got mine a few days ago, I haven't opened the box yet. This can actually trigger an alt season rally. That's not the question, though. The question is, what is your best practice for security around these mobile devices and a wallet? Does anybody, I know, Marty, you probably got a Seeker. Mando, you probably got one too for the airdrops and stuff, but any security things to follow, or could it trigger an alt season?
I mean, I just know I use the Saga phone primarily only for crypto. So I don't do any social media on it. I don't do any browsing on it. I use it solely for crypto. It's worked very well for me. I've had it for many years. And also make a primary wallet. On the Phantom wallet, you can make as many wallets as you want. Make one that's storage only, like a cold wallet, and never use that for DeFi. Make several hot wallets, make a shitcoin wallet. Make sure you use those when you interact with tokens you don't know about. The typical crypto security. Just understand that it is extremely hot right now. So a lot of people are going to send lots of fake tokens to those Seeker addresses. So you're going to wake up and your phone's going to say you have $20 million on it. And you're going to freak out and get greed and think it's real and immediately try and sell it in your main wallet, and it's going to drain you. So slow down. There is no free money. Take your time. If you see something you don't know, move it to your shitcoin wallet. Go and screw around with it there where you have nothing to lose. Just practice good, solid crypto discipline, and you'll be fine.
Yeah. Any CTO, any security methods you like to use with hot wallets on mobile devices?
Oh, yeah. So number one step is to have at least 2 wallets. One where you only store your coins. You don't connect it to anything. You don't connect it to any websites. You don't connect it to DeFi. You don't do anything with it except storing coins and sending them out and back. That's it. That's the only thing you do with that wallet. Assume that all other wallets are going to get hacked at one point. So make sure you don't have too much on them. And yeah, that's step number one. Then you also have to think through, so you don't make it so secure that you lock yourself out if something happens. Say that you have you lose some luggage, or you have a theft or something like that. So you have to think through that you can actually restore it yourself also. Like that's the 2 things you have to cover. It has to be secure against malicious activities, and also you have to make sure that you can access it yourself. And actually, I think overall people have probably lost more money on the part of losing it themselves. Like they lose some hard disk is crashing, or a phone breaks, or something happens, they lose something, and there was all the access. And this is in balance. If I take another example, a lot of people use Google Authenticator for a lot of stuff. By default, Google Authenticator syncs actually all your keys to Google Cloud, which defeats the entire purpose. The whole point was to have 2 devices, that you need 2 devices to be able to log in. If you sync the data to the Google account, you're back to only having 1 account. Then if you hack the Google account, you have your OTP codes also. Then there's no point with the whole thing. They could just have stayed with the password then. Yeah. So then you have to switch that off. You have to go into your Google Authenticator and switch off the syncing. But now, what if you lose your device then? Do you have the recovery codes? Where are the recovery codes, and where have you stored those? And are they at the same place, or are they in a different place? So you have to kind of really think this through. I advise everyone who have like a lot of money to really like take 2 days out. Think through everything that can happen, including that you had a few beers, you're connecting, you're going to do some trade, and there goes the money because you connected. Think through everything that can happen, and like, how will you mitigate it? In cover break-ins, cover cleaning lady, find some keywords, and believe me, they're going to understand what it means. So cover all that. Think through that you are safe against attacks by having at least 2 wallets. And make sure that you won't get locked out yourself and lose all the money.
Yeah, great stuff. That was really, really good, CTO. We're going to switch gears a little bit again. And again, one thing I would like to say, it takes a lifetime to make it and a second to lose it. Remember that, everybody. Big learning. Mando, positioning for rate cuts. From your background, you understand the impact of this on markets and macro. A lot of people are questioning what to do. Do you position yourself before the rate cut? Do you wait if the rate cut happens? And then what do you do after the rate cut? Do you take profits? Do you sell out? Do you buy more? Across what type of assets? Super interesting time coming ahead. We know we're 95% sure we're getting a rate cut in 10 days, 9 days? And the market will kick off. Or will the market front run the rate cut?
I mean, I tend to see a pretty wide range of takes when it comes to rate cuts. I think we've spoken about in this call before, but the idea that people seem to think that rate cuts are bearish because they look at previous rate cut cycles and they go, oh, it's normally coincides with the market selling off. That's because rate cuts normally happen when stuff is going badly. I think you should be going long. I think September is going to be choppy. I've said this a few times, but there's no doubt in my mind that this rate cut cycle is bullish for risk assets. I think what we just had was a very weak employment figure on Friday, and that is going to put a lot of pressure on the Fed, even before the potential new Fed chair and Trump's pressure on the Fed. Like, they are going to have to consider maybe 2 rate cuts this year and a number of other ones through 2025. So I think we're in for a bullish period here for monetary policy, the most bullish period for monetary policy that we've seen in a long, long time. Remember, we've been in a period of high rates and quantitative tightening. Now we're going to move to a stage of at least rate cuts. I think you've got to be bullish. I think Bitcoin is the most obvious play. I think we can debate what happens here with altcoins, because the mantle is moving away from ETH into some of these other coins. Solana looks good. A number of other altcoins look good, particularly in that revenue meta.
Yeah.
I continue to think my favorite coin here, and I've said this a few times, if you just want to have a bit of everything, is JLP, because it has a little bit of everything in it. Just hit an all-time high again today. Makes you like 20-30% yield. It's a nice little coin. Take a look at it. It's the Jupiter Liquidity Protocol perp coin. But yeah, I think don't think the market is top tier, in my opinion. There's been quite a few takes like that over the last week.
Yeah, in fact, I saw Jupiter TVL hit $2 billion, I think. Maybe it was in JLP. I can't remember.
They've got a Lend protocol, which has come out. It's been very, very successful.
Yeah, it's a fascinating project because of their diversity across everything that they do is really, really impressive. Any plans, Marty, for you with the rate cuts? How are you positioning yourself? You just long number go up all the way?
Yeah, I mean, I agree with Mando. I think rate cuts typically in the past have been seen as sort of, a signal from the central bank that they're worried about a slowdown or recession risks. But I think in this case, it's been narrated for years now as something necessary. I think the recession happened after COVID. We were just lied about it. I think the only sort of financial vehicles that will probably unwind will be, people have leveraged a shit ton of liquidity to take advantage of the higher rate treasuries. So, they've loaned, billions or potentially half of trillions of dollars to get that 5% yield from the government. And when rates drop, they no longer want to keep their money with the government. So they might unwind them. So there might be a short-term temporary, bleed out in those situations. But I think it'll be minor. In my opinion, this is the most bullish news in crypto right now. Cheap money. We all know the whole strategy right now is debt into hard assets. So I think people are going to go to the bank and loan whatever they can with cheaper rates. Good for the real estate market, which was our biggest problem, was this real estate market potentially tanking on low inventory. And I think this will stimulate inventory, so will cause inventory to rise as people can now refinance. And so there will be a short-term real estate correction, probably to COVID plus 10% or something. Don't panic. It'll be a V-shaped flush as people get new mortgages and buy new homes. But if you are looking to buy a new home, I think your time is coming soon, but you're going to have to get it fast.
Yeah, I recommend buying the home before the cut, because once the cut comes in, it makes homes more affordable, which drives the prices up. But you're right, there is that lag of like 30 to 60 days that can be in play. But we'll do a couple of quick live questions. We've got more stuff to talk about, but this one came in from Just Watching, which I found kind of interesting. And CTO, walk us through the gold Bitcoin chart, because the reason we care about this is because the lag is 30 days between gold making a new all-time high and Bitcoin following 30 days later. The other thing is, this time is different. We've said this many, many times for the last year and a half. We've never had a rate cut at this stage of a crypto bull run nearly at all-time highs. Things are going to kick off. That's just the macro of it. CTO. You might be muted.
Yeah, so here is Bitcoin divided by gold. And actually, it's an astonishing chart if we zoom out a little bit. So look here how, for as long as this chart is painting, we have moved up. Bitcoin over gold. But look here, Bitcoin versus gold has moved into this ascending triangle. And we're right in the apex of the triangle now, like right at the end. Can you see it here? And it feels very dramatic here. Oh, gold is picking up, and why is Bitcoin not pumping and so on. That's only this part here, guys. This little tiny thing here in the corner of it. That's it. So imagine this breaks out.
It will. Yeah.
Target is crazy. Target becomes up here on the log chart.
So how many ounces per Bitcoin is that then?
Yeah, it will flip around completely. It will completely change the dynamics of the world if that target reaches. So I think this is a very, very promising chart. It has not broken down. Still in the triangle, still making, higher lows, moving up against this boundary. Imagine we're sitting here and we have a breakout. Then that means that Bitcoin will be on the on track to try to take over or gold's position. That could happen, guys. It is not a crazy thing looking at this chart. So I agree with you. I think that the fact that gold has this structural breakout usually has meant that Bitcoin gets a continuation breakout as well. And let's see here. We're at a very interesting point, and we will follow this gold versus Bitcoin for sure here on the channel.
Very, very short question that came in as well. People are worried that the Elliot wave, C wave, indicates a dump for crypto. I personally don't believe in Elliot waves. Marty, I know you do. I believe you can make any chart fit a wave pattern. That's my thesis. But I'm interested, Marty. The Elliot wave does indicate a dump here. I don't see it. What do you think?
Yeah, I'm not really. I've never been an Elliot wave guy. Got me wrong. I think it's right.
Okay, so Wyckoff and Elliot wave.
I like Wyckoff, not Elliot wave.
Okay, I thought if you liked one, you liked the other. My bad.
No. I'm an accumulation distribution guy. Wyckoff.
Good.
I think everything's an accumulation when it goes down in a novel asset class in high demand. And every time we get a blow off top, that's just a distribution. So it's all accumulation, reaccumulation, then a distribution, then an accumulation, reaccumulate, exactly. And that's Wyckoff theory. Yeah, I don't know about the Elliot wave things. Maybe you can explain to us.
Oh, it's just one of those age-old TA indicators. CTO. So I always say keep your head out the window, because money macro drives price, not TA. But TA does identify when to enter and when to exit. That's the difference. So your FA and your money flow.
I don't use it. I never got it. Like price levels make sense. It's not like some magic lines or something. People remember price levels. That's it, and that works because of that. So I don't use Elliot waves.
Yeah. Good. We had another big piece of news happen last week for the AI investors here in the audience, and I know there's a lot of them. Shout out to T&D Tesla as well. And this is a cool chart from Søren Basher, friend of the channel. And we heard about the new Tesla comp package for Elon Musk. He's got to take the company to $8.5 trillion market cap. The question we've always had is, how many shares you need to have to be a millionaire? Now, for years, since 2022, I said, try get to 300 shares, everybody. That's the golden ticket. And again, it was very easy to get to 300 shares when it's only $106 or something. But now, if Elon executes on this package, which I think although it's a huge challenge to build a company that's more than twice the size of NVIDIA, etc., or multiples of Google, Microsoft, Apple, you name it. But the key number here to focus in on is $400 billion of EBITDA, one of his goals. At a 40 PE, that means you need 251 shares, not 300. If you take just the plan, you need over 450 shares. So anybody here, were they impressed with that comp plan for Elon Musk? The first $1 trillion plan in the history of the planet? And he will be the $1 trillion man anyway in terms of wealth, even without Tesla. He'll get there with XAI and SpaceX and Neuralink, I believe. Mando, any thoughts? TradFi stuff.
Yeah, look, I think TradFi here. Oh God, sorry. Can you guys hear me?
Yep. Spill a coffee on the keyboard. Okay.
Hello.
Yep, we hear you.
We hear you. We hear you.
Oh God. Oh, sorry. Tesla. On like the TradFi side of stuff, I think we're in for a pretty strong period here for like global stocks. And the Tesla continues to be my favorite move here in terms of the Magnificent Seven. I think he's got a very, very strong platform here. I bought some in that last dip, and there's been a couple of hairy moments on the, but it now feels as though with this new pay package, he's going to be massively incentivized to take this thing to multiple trillions of dollars. And I still continue to think this is one of the best plays for robotics and AI out there. So it's actually one of the only ones I think has quite a strong moat around it out of the Magnificent Seven here. Like not many of the others are doing many of the things that Tesla is. I think that puts it into a pretty unique basket.
Yeah, you nailed it there with moats. They have infinite moats across so many different perspectives, hard to touch. So excellent, Mando. Marty, Tesla comp package, $1 trillion man, madness or normal?
I mean, it incentivized me. I mean, I'm like all Tesla all of a sudden. I think it's the greatest move ever. $1 trillion pay package is how you get a human being to do something. So you say if you have 300 Tesla shares, you'll be a millionaire. So that's roughly 10,000 US, right? Right now.
It depends on the price target. So let's pull up the chart again.
Let's be specific, James. Just tell the audience today
So
how much money they need to put in Tesla. Go.
Okay, so basically, to get to $1 million, the stock price needs to be about $4,000 for 250 shares. That's a $400 billion EBITDA at a PE of 40. So 250,
Okay.
but I would say 300 to be safe. And I said this back in 2022 when the price was very low, like $106. Now it's $350, so it's a little bit different. But that is also sandbagged because I easily see the price of Tesla going to $8,000 by 2032. That's double that. So technically, you could get away with 125 shares, and that'll still get you to $1 million in 2032. But the problem we have is, what can you actually buy with $1 million in 2032? CTO, what do you think of all this craziness?
I'm impressed by Tesla. I think we got some good entries here.
Is that a Tesla chart?
I'm on another chart. Let me switch around.
And it's been a volatile beast, no doubt about that.
Oh, yeah. I think it's been very, very good, actually. We talked about it here on the channel when we had this dip in April. Was it in April?
Yeah, 220, 210.
We had this dip to the trend line, hit there exactly and reversed. Then we had this symmetrical triangle, which has broken out on the upside. So, and the trend never turned down. This whole drama that happened in the spring, the trend didn't flinch. It just cruised through it. So I'm very positive to Tesla. I feel quite impressed by this talk about building the AI chips for like inference and so on. And I think it's hard to predict where this could go. Elon has been so successful with basically everything, and he could easily branch out inventions from the core element into other arenas. Perhaps they produce chips or something, who knows? So even if not everyone buys an Optimus house cleaner, perhaps there will be other applications as well for that technology. I see it as a technology company, not as a core company. I think that's important.
Exactly. It's yes, Marty.
So I mean, so just so that people understand, you could either invest $10,000 now in order to be a millionaire by 2028, let's say, or you could get a call option. Remember, Tesla 350 call option expiring in June 2027 will cost you $10,000, which has an unlimited profit. I mean, if it goes higher. So there are options. And James, maybe you want to tell people what would you do? Is that a good idea?
Yeah, I've been buying the $300 leaps for December 2027 for the last month or two. So I like 300s because I think they'll do a 3-for-1 stock split. So it'll take the price to $100, which is high liquidity level, strike point, and that's what I like. But they are expensive. They are very expensive. They were cheaper a month ago, and they've gotten quite high right now. Let's wrap this up real quick. I know people are on the move. I hope your keyboard's okay, Mando. Any final thoughts and any quick questions from the audience we can tackle here real fast? Marty, how does the week ahead look?
I think we covered it all. I think the takeaway today, obviously, from all of the hype on these corporate chains, is just remember why we created blockchain. Technically, we created it to remove any single point of failure. People need to really focus on that and what that means. And any corporation or sovereign venture creating their own blockchain is creating a single point of failure. They literally do not understand that. Okay, they're trying to own you, to own the network, because they are rent seeking. They are trying to make profit between you, your money, your work, and the things you need. And that is over. That day is over. We've sold it with cryptography and technology. So they will fight like dogs. And this is what I call phase 2 of the fight. Phase 1 was a regulatory fight, choke point. We all went through that. This is phase 2. They will try and invent their own versions. They don't understand how hard it is. It costs probably $1 trillion to create 1,000 validated distributed network with adoption right now. They will fail. Like they did with the internet, like CTO just said. They've tried this before with the internet. They tried it with operating systems. What operating system won, people? Linux, open source, public, wins. And that's my final thought. Don't panic. This is expected. In fact, watch it flail. These companies will spend so much money and waste it all, and their stock price will show that. So interesting times. Wait for phase 3 when they give up and they integrate to the public networks. And that's going to be where, you know, you get the massive appreciations. I call it full crypto adoption. So there we go.
And we've never seen a situation where we have crypto revolutionizing so many traditional finance industries and AI wave hitting, the tsunami hitting all at the same time. It is quite an exciting time to be alive. CTO, do you know how to buy leaps in Sweden?
So we're talking about the leaps or the leaps or the dips. It's a lot of
leaps, long-term call options.
It gets very specific to issuer and so on. So perhaps I don't go into those advice.
Okay.
But it is definitely possible to buy a lot of options and contracts for differences in many different ways in Sweden as well. There's a lot of suppliers that serve that market.
Yeah, Interactive Brokers, Saxo Bank, and another one there. Tasty Trade. You can actually buy leaps. They are all regulated in Sweden as well.
Yeah.
Good stuff. Final thoughts, Mando, as we wrap for the week ahead. We know Sunday, Monday is always strong. And then Tuesday, Wednesday, a little dipperoonie, and then we strengthen into later in the week. What's going to happen this week? And Rectember is off the cards, it appears. We are nearly halfway through Rectember, and we are up strong on the 8th.
Oh, two things we didn't talk about is obviously Galaxy issuing their stock on Solana, not an index.
Right.
The actual corporate stock. That's the first time in history. I thought that was one of the pivotal moments in crypto. We didn't talk about that. As well as Paul Atkins, the SEC chief, announcing cross-border task force, right, to combat fraud, market making, wash trading, all the things I've been preaching for the last 2 years. Atkins is listening, people. They're going to make it illegal.
Wintermute, Binance are in hot water, hopefully.
Yep.
Mando, back to you. Week ahead.
Week ahead, I don't know. Like, we always tend to sell off on a Friday and rally on Monday or Tuesday, and we've been doing that for a while. I just think we're going to have a volatile month. I actually think it's a really good time to buy crypto. I think a lot of people have sold or think we've topped, and we're about to go into a very, very bullish period here for monetary policy, and I don't see why we would have topped by any other metrics. So I'm still very bullish. I think the easiest play is Bitcoin. I obviously I've reduced almost all of my ETH position now, so I own a few other different alts, which I prefer to ETH right now, but I prefer Bitcoin the most.
And I'll throw 2 tailwinds onto Mando's comment. One, we got the rate cuts coming in 10 days. It's going to be good for the markets. Second of all, we have M2 globally making new all-time highs. And third, probably the biggest thing of all, and I forget what the third one was. Oh, gold. We're gonna chase gold within 20 days. So technically, if history repeats, Bitcoin will be making a new all-time in 20 days. Not financial advice. CTO, what do you think?
Yeah, and we also had, maybe you guys mentioned, but we have had all-time high in stocks also last week.
Yep.
So, everything pointing up. It's both scary enough in crypto to shake enough people out. I think this could be it. Again, I'm watching these levels. If we put in an inverse head and shoulders, it's not some magic lines. Head and shoulder just means that, the next time it goes down less because people are too eager to buy, so they cannot wait for the price to go down further. They're stressed and they're buying it up above this neckline. It's like uncovering what people are doing instead of what they are saying. That's what technical analysis is. Sometimes it's trying to, fake you, but sometimes it reveals what people are doing. So I'm very excited for this week. This could be it.
And CTO, what's
James?
also very, very interesting too, is I'm having maybe not enough coffee today, but Marty, go to you first.
Just can you share the screen? I'm trying to share a screen. Just pull that up for people.
Sure.
See it? Okay. As I narrated, look what happens between the 26th of the 6th of every month this year since the spring in April. What happens right after this formation?
October.
We move up. There you can see right after the circles, we go up. Look what just happened. We just did the same thing in September. It's the 6th. We're going up. We're going to do the same exact thing. There you go.
Yep, exactly. October is coming, but October could already begin in September, based on history. And we, I still go back to the gold and the rate cuts. Nothing but goodness money. And one thing I wanted to mention regarding CTO. Yes, you're right. A lot of retail have been shaken out, which is important. But two whales have sold nearly 100,000 Bitcoin. It was completely absorbed in 30 days. And the market, the Bitcoin price only fell like $4,000 or $5,000. So the liquidity in the market is something to behold. And treasuries are buying 4 times the supply. That's all you need to know. Retail are not in control of this bus anymore. My take. Anybody want to challenge me on that?
I'm not challenging you.
ETFs and treasuries, they're the ones doing all the stacking. And even if a whale comes in and drops 100,000 Bitcoin, it's a nothing burger. It'll be absorbed. I want to thank everybody for coming. Happy Monday. Happy week ahead. Thank you to the mods in the chat. Thank you, CTO. Thank you, Mando. Safe travels. Thank you, Marty. You all be safe. Catch you on the flip side. Bye.
Thank you.
Thanks, guys.